Corsellis here, Prime Traders Club Pro Trader. I'm with one of my members. You may have seen his face before. This is Isaac. He's a PTC member, and in the last 30 days, his cryptocurrency account is up, I think you said, Isaac, 492%, which isn't bad in the last 30 days, and that's been relatively choppy as well in terms of BTC and the action of ETH pulling back. So fantastic performance. So Isaac has now been with me for around about a year. And in terms of his trading journey, he was a newbie before joining, and he's now got to the place where he's trading really well. As I said, his crypto account is up 492% in the last 30 days alone. So he's really going to be talking in this video in terms of his journey, the setups he's now targeting, how he actually goes about managing positions as well. So it's going to be more of a deep dive, this one, into Isaac's kind of journey from a newbie to actually a really serious trader who probably isn't very far away from doing this full time. I would say, Isaac, you're probably looking to go full time maybe in the next 6 or 12 months, I would say, given your kind of your journey, how well you're trading as well. So we've got a couple of your crypto trades, Isaac. we got 5 of them we'll work through. So let's just start. Take me back to November-ish last year and your first kind of couple of months being a member, as you were kind of learning, and then fast forward that to the last 3 months or so where things are now clicking, you understand it, you get it, and you're trading really well.
Okay, I just had to get a little reminiscent. So the first couple of months, I started at a really good time. Some would say a good time, some would say a bad time, because you never want a new trader to get a little bit overconfident and get a little bit ahead of themselves. But I started at a relatively good time. I think Jack's going to pull it up if we look at... I think I know exactly when I started on the FFTY, if you want to have a look at the FFTY.
Yeah, we can do the FFTY.
It would have been through that would have been the same period there.
Yeah. So Isaac started in pretty much November.
Just after that, just after that big red candle. So I got to ride that run all the way up towards around March, and I made money, which was quite a surprise. Like everyone obviously gets into trading to make money. That's the motivation for 90, or I'd say 100% of people. But then what happened is I'd never, as far as trading experience goes, I'd never done it before. So I didn't really understand, even though Jack was telling me and I listened to all the information about the difference between the different market cycles, without actually experiencing trading in those two different environments, or the 3 different environments, what it's actually like, you never really know what you're getting into. And so I done quite a good job, and my account was ticking up, and then I got a little bit of a shock when the market turned, and I think I draw down about 3% or something like that. Wasn't a very nice feeling. But then we took the foot off the pedal, so to speak, or what I thought I was doing at the time. And then we started to continue through this sideways choppy market. And then over that period of time, I continued to trade and lose money. That's basically what happened. And I tried different things. I even, thought about, I'd be lying if I didn't thought about quitting at times during this period. Hang on a sec, mate. I'm sorry. Learning to kind of... I don't know. I don't even know where to start with this, because this section, that red section that Jack's highlighting, that's probably the hardest period initially, and I thought about quitting a lot. But it's also, that was the most valuable period where I really had to reflect on what I was doing, and more so what I was doing wrong. It wasn't necessarily that I didn't understand what I was meant to do, but actioning is 2 different things. And for the listeners, if anyone's read Market Wizards and a lot of those books, there's a generic catchphrase that they kind of keep throwing out, which I don't actually like. They say, you've got to figure out what works for you. And I think in some regards that's nonsense, or it's incomplete, because what they're really saying is you've got to figure out how you work. And what I mean by that is you'll have all this information in front of what you're meant to do, but greed, fear, and your emotions override that, and they get in the way of the process, and they get in the way of you learning how to trade. And the problem with all these things is they're subconscious. You don't really know, or you're not really aware of the mistakes you're making initially, especially when, depending on kind of your personality type and where you kind of sit on that risk curve, you'll find yourself taking risks and you're not really aware of the fact that you're taking unnecessary risks, and then you'll slowly see the account going down. And like, we're all human, the initial reaction is to blame the system and not blame kind of the actions and the decisions you're making.
Yeah.
And basically it was very confronting. I had to have a good look at what I was doing, and kind of really take a sit back and kind of take the ego out of it, or separate the results from the emotion, because it fucking sucks losing money. Like, no one likes to lose money. It doesn't feel good. And when you're in a situation or in a state like that, you tend to try and protect yourself from it, in terms of like, oh, it's not me, or it's this, or do you blame the market? And I don't know, I just kind of put the brakes on things, stopped taking some trades for a little while, sit back and really had a look at what I was doing, and then realized, okay, I'm probably not managing risk very well, and this is why I'm getting caught out. And I obviously can tell by the accent that I live here in Australia, and a lot of the times I was, going to bed on profit, and then I'd be waking up and I'd been stopped out, and I was really frustrated by that, because I kind of felt helpless to some extent, because it's like, well, it's not really me. Had I been awake, I would have been able to manage it better, but I'm not, so I've got to think about these things. And then, I don't know, recently something clicked where I have a rule now of, like, if I'm in profit, whether it's 4%, 8%, 7%, I don't really care on the number, as long as it's above 4%. 3% might be a little bit too small to scale out. But if I'm in profit and I've got to go to bed, I'm going to sell half or sell a portion, move my stop up and go to bed, and just take it as a win.
Yeah. Fantastic.
Yeah, and just move on.
Yeah.
Like, I'm not... You get into a habit, especially different personality types will really do, but you try and be perfect. Like, you try and maximize the profit and get the most out of the trade. And what I've found, starting to think like that, really what happens is you tend to trade poorly, because you're so focused on trying to find the right, or like sell at the top, or you know what I mean, like sell at the top and maximize profit. And that's really not what's important. What's important was I kind of, it was less about making money and more about just being obsessive with managing risk and being able to free roll the trade as quick as possible and take that profit off the table as fast as possible. So then once you've done that, the stress is off. There's no more pressure.
Exactly.
So I don't care anymore. I'm the first thing I want to do is sell it to and for the listeners or the people watching, sorry, if you don't know what I mean by that, let's say you've got a stop loss, you're going to use a 5% stop loss, so 2R would be a 10% gain.
Yep.
So I'm targeting that 10%, I'm scaling out as soon as I possibly can.
Yeah.
And once I've done that, the pressure's off. Like, I don't care if it comes down and I get stopped out at break even, or if it keeps going, and I'll manage it accordingly.
So what Isaac...
Regardless of what the outcome is, if it goes up or it comes down and hits my stop, it's a profitable trade, and that's my number one goal, is make profitable trades.
Yeah. So what Isaac's saying there is what we always kind of bang on about, is there's three parts to a trade. You need to control risk. Number one is control risk. That is going to be your initial stop loss. Number two, and this is where most people skip this part, but if you just listen to Isaac and what he's actually learned over the last 12 months or so, is number one and number two, which is control risk and then mitigate risk, are the most important parts of a trade. So the mitigate risk part is basically free rolling the trade as early as possible. So as Isaac was saying there, he's taken a stock for a pivot point. I can draw it. So let's say we have a line like this, and let's say Isaac is targeting kind of a VCP breakout, contraction 1, contraction 2, getting nice and tight in there. So what Isaac is doing here is he's targeting this breakout. Let's say he's got his initial stop loss at 5%, something like that in there. What Isaac is then doing is Once he gets to a profit, that first kind of pop, so let's make this a green arrow, that first pop, he's selling part of his position in here. He's selling part of his position here. He's moving his stop loss up to break even. So even if he's now stopped out at break even, it's still a profitable trade. And this may have been, he may have been selling this at, as he said there, somewhere kind of 4%, 5% up to kind of 10-ish%, around that level. But where he thinks there's been a pop, he can de-risk the trade, free roll the trade. So that's the mitigation of risk. And then the stock is either going to do one of two things. It's either going to basically continue going up, which Isaac can then manage that. Some simple systematic rules around some moving averages, 10 EMA, 21 EMA, or taking it bar by bar, and or it's going to come crashing back down like this, but it's still a break-even trade. So what Isaac said there, that's literally worth millions. He basically said his performance, and he's up 492%, and it isn't luck, it's skill. You'll see that on his trades that he's taken. His performance skyrocketed when he started obsessively focusing on risk. Not profits, focusing on risk. That's like golden nugget, Isaac, there, I would say. But you learnt that, and then here's the perverse nature of the market. You learnt that in here, when most people give up and quit. This is when you were forced to learn it, because these kind of choppy markets, like bear markets, when the market, if you're a breakout trader, and Isaac predominantly trades breakouts, I would say 90% of your trades are probably breakouts, maybe 10% kind of spring kind of trade, especially in a bull market like we are for crypto and also for the market. Again, the majority are going to be kind of breakout trades. But when the market is doing this is that kind of 80-20 rule, where you make 80% of your profits in 20% of the times. So trading breakouts here, really good. When you get more of these kind of choppy sideways markets, these are the hardest markets to trade in. You can see it over here, we've got it in red. During these markets, this is pretty easy because nothing sets up. Bear markets are easy if you're trading breakouts. Very few things set up, and you can focus on relative strength to find the strongest stocks in the markets. You think in kind of the COVID crash, there was the likes of Zoom, which were hitting 52-week highs. So the relative strength, you're going to see dot after dot after dot like that in the leading stocks. Pretty easy to then get ready for the next move. But it's these choppy markets where I found doing Prime Traders Club, most people quit during those choppy markets, but that is where you really hone your trade management, your risk management, control risk, mitigate risk. So that was a brilliant kind of intro in there, Isaac. So in terms of, let me load up a couple of have you got anything else you'd like to add about kind of during that time there, just other lessons you may have learned along the way as well?
Really kind of the thing I drive home, or if I'm talking to someone about the subject, if you're new, if you're new to this, it sounds counterintuitive, but your goal shouldn't actually be to make money. That needs to come later. That needs to come a lot later. First, you're like, it's all about being able to identify positions and identify the setups properly, because people, even after several months or maybe longer, still, from my experience interpreting, like giving feedback on members or talking to friends, is they can't identify the positions or the setups properly. Because you're getting caught out kind of by your own emotions and FOMO and just wanting to make money. So it's counterintuitive when you're like telling you don't want to like think about making money, because that's going to get in the way of you making money.
Which sounds really perverse, but if you can, I always try and tell people, like, if you can focus on becoming the best trader you can be, and your actions are consistent and congruent to that of a professional trader, you'll make money. The money has to follow as a result of you making consistently good decisions. If you make consistently good decisions over the course of 100 trades, and the market is not necessarily favorable, but the market isn't tanking like this, you'll come out on top. Just manage the risk. Just keep on managing the risk. So let's go into, that's a nice kind of segue, Isaac, into the setup. So as I was saying there, let's just load up BTC. So Isaac, in the last 30 days, which is this period in here, I know you tried to show me on your phone, but it was hard to see with the app, Isaac. But so in the last 30 days, so let's just call it basically this period in here, you count still up 492%. Like, and BTC is not even like to the moon, as many people would say. it's pretty much been down during that period, certainly over the last couple of weeks. So Isaac has basically traded through this, and this is what I try and like explain to people. Like, you can't learn to swim reading a book. It's impossible. You can understand kind of the mechanics about breaststroke, crawling, and stuff like this, but until you trade through this market, really good market, choppy market that tanks, accumulation market, phase 2 market then pulls back on you, and you trade through all of these different types of markets until you do that and you actually experience, okay, when do I, and this is Minervini's concept of progressive exposure, which you've got really good at, Isaac, is when do I put my foot on the gas pedal, when do I ease off? And it's kind of that constant gas pedal, brake pedal, gas pedal, brake pedal, and that's something you can only gain with experience. So people that try and do this for a month have no chance. You have to go, look at Isaac. So Isaac started here. Isaac started here. Look at everything Isaac has now traded through in cryptocurrency in the market. Look how much experience he's got in the last year. It's actually been a fantastic time, Isaac, for you to learn, because look at all the different markets that have happened. Nice uptrend, phase 3 distributional top, phase 4 markdown, phase 1 accumulation, phase 2 uptrend in here, market pulls down, and now you're getting these stair-stepping motions. Like, you've pretty much traded through the spectrum.
I think I've traded through the spectrum as far as stocks go. BTC or crypto, I've only started trading. I took my first crypto trade when I bought Bitcoin during that phase 1 accumulation base, when you first took your first position. Yeah.
Oh,
that was my first crypto trade.
And that was on this day in here.
You bought it like 32,000? I think I got in at like 37 or
29.
Like that or something.
BTC, I've got it loaded up here on the USD. This bar in here, just underneath 30k. And then you'll recognize this pivot spring strategy entry. I should have entered in. I should have loaded the boat in there.
Yeah, I know.
I'm pardon. I missed that. I missed that.
I missed it too.
Yeah, I missed that. But
I don't like. I heard you say you missed it. Like, I saw it. I know you saw it, but it just didn't occur to me that, I should add to the position.
And that's kind of the human side of trade. Like, we miss things. Yeah. We make some bad decisions. And a lot of the bad decisions are actually failed opportunities. Because when you get to the level that you're now playing at, you realise the size of the opportunity. And if you don't pull the trigger, you can look back in a couple of months and go, take the spring trade in BTC. Like, it's doubled. It's over doubled. And it's like, why did I not take that? I should have taken that. I know the risk. I know my stop loss probably would have been 5% or 7%, but I have massive upside. I have asymmetric leverage.
Profit on the trade
immediately. Like, it was a great trade. So again, when you start playing it at a higher level, then a lot of your mistakes are actually missed opportunities. And you see the setup and you don't take it, and you're like, why did I not take that? I know that's a really good setup. I know what my risk would have been. I know that I could have achieved a really healthy risk versus reward, and I didn't take it.
I missed an entry on SHIB this morning.
Oh, I took that one yesterday.
You took that?
Yeah, it was a really good entry. Yeah.
Yeah, I was watching it, and then, I don't know, that's one of those ones that's been on my radar, but at the same time, I don't take it seriously because it's a meme coin.
I don't take any kind of smaller cryptocurrency seriously. I actually, on those ones, I try not to even know the story or what's going on behind it. I just look at supply and demand on the chart. I like to know more so the fundamentals about Bitcoin and ETH, but all the other ones, I just don't care about it. And there isn't enough time in the day for me to even care about it. I just want to trade high quality setups.
It's such a rabbit hole anyway.
Oh yeah, you can get lost down there, and then you could believe in the story too much. And then suddenly you're down 5-7%. I should really get out of this. But the story's really great. And then suddenly you're down 20, 30, 40, 50%. And you go,
oh. There's so many great stories, though. It's just so enticing.
Yeah. So let's start talking about some of your setups. We got SOL USDT. So SOL is the first one. So we got the 10 EMA, black line, 21 EMA, blue line, and the 50 SMA. So Isaac's entry is in here. He scaled out a little bit in here, and then remember when he scaled out, that's the moment in time he's moving this red line, his stop loss up. I'm not going to do that for the video. People can kind of understand. This red line here is to indicate where his initial stop loss would be. And then next thing here. So in terms of setups, Isaac, it takes a while, I would say, to train those pattern recognition skills and get it real dialed in for, okay, what am I looking at? What's the setup I'm looking at? So talk me through Sol. What were you seeing here? We probably want to start with this pretty nice advance.
Yeah. So obviously, it had a very, very nice advance. What was 600%? Yeah, missed that one. I don't think I was trading crypto at that point, but anyway, talking about missed opportunities and kicking myself. But yeah, if you look at obviously just look at the trend. If that doesn't tell you that there's bullish demand and this is a very serious cryptocurrency, nothing will. Just going off the chart alone, that tells you there's an extreme amount of money flowing into this particular cryptocurrency, and the volume backs that up. You can see why Jack is circling that.
Yeah.
So and you look at like those 3 particular volume days where they're side by side. That's a massive amount of volume. Well over the 10 million mark.
Yeah.
And this is a $150, $200 crypto.
Price has gone up 100% basically in 3-4 days, and massive. What Isaac's talking about there, those surges in volume. Whenever you see those big surges in volume, and you see a cryptocurrency or a stock go up 50%, 100%, somebody knows something with a lot of money, and they are piling into it. So yeah, sorry to interrupt you there, Isaac.
That's fine. So basically that's all we're trying to do is we're trying to identify where the money is flowing in, and then using our risk management skills and our ability to identify an entry point, where we're just waiting for that specific entry point, like a little sniper, and then clicking the button, so to speak, placing the trade, and then playing it out, and managing kind of risk. But as far as this one goes, like as we saw at the top, it started pulling back, but if you look at the volume matching the pullback, the volume drops back as the price kind of moves down, just before it starts to flatten out. Volume is dropping off, and if you were to draw a sort of a sloping trend line, you'd see you get a breakout candle on the day. I missed that one. I missed that one. Actually no, I was talking further back.
Okay.
So if you further back.
Oh right, yeah, got you. Coming through here.
Through there.
Something like that.
I missed that. Yeah, that would have been a relatively nice trade. You would have got a quick little pop on it. Probably went up around 20-25%, something in that ballpark.
Yeah.
There you go. That would have been a nice little trade. I would have been very happy with that. Missed that one, obviously moving forward. And so at that point, I spent a little bit of time, obviously looking at the chart, going over the volume, and just deciding this is one I want to wait for. Like, I want to position on this. Something Jack's been talking about recently in the PCT membership, and on the weekly such a mouthful.
The weekly watch list crypto video report. Yeah, it's a mouthful.
Yeah, the crypto and the live shows. You've been using the analogy of like having your star players. In terms of like your top 5 or your top 10, this is one of my star players in crypto. This is one I'll probably continue to trade for a while, unless it obviously tanks and go to zero. But it's a layer 1 sort of protocol. I won't kind of get into the details, but basically there's a lot of money that's going to flow into this, and if it continues to behave the way it has over the last couple of years, it'll probably continue to go up.
Indeed. So this setup that you're targeting here, Isaac, I like to tell people like the 50 SMA, 10 EMA, 21 EMA are good reference points to be looking for those setups for when you actually want to initiate a position in here. So I would say this has got kind of a VCP look to it. Contraction in here, pretty tight contraction there, getting pretty nice and tight around all of those key moving averages in there where you're targeting it, as you said, volume coming through. And then stop loss placement in there. Even though this is a cryptocurrency, the risk is still, maybe it's marginally a little bit bigger than we'd take on a stock, but people think, cryptocurrencies are so risky, no, you can still search for those low risk entry points, kind of. And this is, the risk on this trade was probably 7 or 8% initial stop loss. Starts getting out here, scale out, and then you're moving your stop loss. I'll just drag it up like this. Then Isaac's moving his stop loss to break even. And then you're using, in terms of then your sell rules after that, Isaac, you were saying you were using kind of some of the moving averages as kind of exit points. Which ones are you, what's kind of your thinking on those at the minute?
Well, it's changed a little bit. I've been experimenting with it in some regards, trying to like play it on a higher level in terms of like stocks currently. How I think about scaling out is going to be very different to how I think about scaling out something like this because of the market environments. So the market environments are a lot more hostile as far as trading stocks. So I've probably, as far as how I've been thinking about it, if the stock gets out well and I'm able to de-risk it 2R, I will de-risk on that initial pop or however long it goes.
Yeah.
And then I will, if it starts to get extended from the 10 EMA, I will try to scale out around the high point, and then sell probably the final third of the position as it crosses the 10.
Yeah.
Or closes below the 10. That's probably what I'll do in a choppy environment. In a healthy environment like this one, I chose to scale out at 2R.
Yeah.
I then chose to scale out a portion where I was certain that price had kind of closed below the 10 EMA, and then I sold the final kind of piece of the position when price had opened below the 30.
Yeah, and stocks
the 21, sorry.
Yeah, no problem. And stocks that are going to trend well. So let's just say it's not, I mean, it got pretty tight in there, but maybe under the 50 SMA, so we would have passed. Arguably, there's an entry in there. So let's just say you're taking that entry in there. Stocks, cryptos that are going to trend really well, generally are going to ride their 10 EMA and 21 EMA. And once you start closing below those ones, and especially if it's bearish candlesticks, volume increasing as well, and if the crypto is or stock is up hundreds of percent, usually there's going to be a cooling off time. But you can see here, this didn't close below the 10 EMA till a gain of 330%, and below the 21 EMA over here, 256%. And the risk on this trade, so again, massive asymmetric leverage you're achieving with systematic sell rules. Really, really simple. So if Isaac was taking this trade down here, let's say he places his stop loss in here, somewhere like that, we'll use a black line. So his risk on this trade, again, maybe around kind of that 7-8% mark. But look at everything that he's positioning himself for to potentially get. If he's going to be, and again, you were saying to me before we started recording, right trader, right market, right time. And a lot does come down to that. And the recent video, the 80-20 rule, just positioning yourself in the 20% of the time where you're going to make the most amount of money. So let's go on to another one. Let's do SAND USDT. This was a big winner for you on this one in here. So same kind of process in here. And there was a shakeout during this day. So then you were taking it, I imagine, as it was trading back through, and the stop loss, I should have put that in before we started filming. Stop loss in there, something like that. So Isaac actually scaled out in here. Really nice first move. And talk me through, and then you got 130% move on the final parts. Talk me through this setup, Isaac. What did you like about this one?
Well, just like Sol, we see that the initial first rally before the entry, you see a lot of demand stepping in, and it's backed up by the volume bars. So
yeah.
The effort is very high and the result is very high. I think that was probably, I think that move was over 100%.
Yeah, 330. Yeah.
Yeah, there you go. So I was looking at that, and I'm looking at the structure, and so I'm like, it's showing that when this thing does move, it moves very explosively. So as far as the risk on the trade, I'm like, well, this is in terms of like risk reward, it makes sense to kind of give this one a go. And I really liked the sort of quasi cup and handle that.
Yeah, nice.
Kind of that it kind of demonstrated. You know, the pullback to the bottom of the sort of cup wasn't that large. The volume was really, really low, and it continued even on the little rally that it made before the entry point. So there wasn't, as far as price movement, the volatility really stayed quite quiet, because sometimes with the cup and handle you can see quite a little bit of volatility in the base or in the bottom of the cup, and that makes it difficult to kind of get a cheat entry, or just to trust the setup in general, depending on kind of what it looks like or how much kind of distribution is going on in the bottom of that cup. But this one did the opposite of that, and as you can see, for the entry point, you see those multiple type candlesticks, sorry. And something I've been saying or talking about to myself recently is price is news. Like the most up to date fundamentals to some extent. I know it gets a little finicky or specific around the words in terms of what are fundamentals, but price is the most up to date current news that you have. And in terms of like setting or using let's say the top of a supply chute for or the tail on the top of your candlesticks to mark out your pivot point, the more recent that pivot point is, I think the more accurate it's going to be. Because regardless of, like, let's say, I'm going to point at the screen, you can't see it. If we wind back further back, to the top of that rally, a lot of people would have used that as the pivot point.
This one here at 345.
Yeah, they use the structure or and this is something I used to do when I first started, and I didn't really understand what was more important is it's that price compressing where everything's starting to get really, really tight. And those are the kind of the characteristics that I'm looking for. And when I get that kind of behavior, that's what I want to set as my pivot point. Now, obviously, there's going to be a little bit of nuance to that. We like to have some black and white rules in trading, but at times there's going to be things that contradict it slightly. So there is a little bit of nuance to this, but generally, I'm the further along I can get that pivot point, the more accurate I think it's going to be.
Yeah, agreed. Give the viewers a little golden nugget, Isaac, of your wisdom. Those two tight candlesticks and the volume drying up, what does that tell you about supply as that pivot point's forming?
Well, as that's forming, what that's telling me is that there's very little volume of trading that day. So, and in terms of like the price being the most up-to-date news, what did the news tell you? It told you the price didn't move down, it didn't really move up, it stayed neutral, and same with the next day. So there wasn't a lot of action, there wasn't a lot of price movement either. So it's a very crucial point in the stock, because it's either going to go in two directions. It's either going to it could potentially pop and move move sideways and do a little bit of a fake out, but when the environment's right and the setup presents itself, I'm going to take an entry point like this 100% of the time, regardless of whether I think it's winning a trade or whatever, because opinion is irrelevant a lot of the times. I've taken trades that I didn't know this one probably won't work, but it kind of meets the criteria, so I'll give it a crack, and it goes up. Sand, this, I didn't know. I had no idea that this was going to go up 170%. And it just worked.
Yeah.
It's not like I knew this one was going to go up that much. I followed my rules. I took the entry point. I managed the risk on the trade, and it ended up paying off.
Yeah, and those tight candlesticks, they're kind of your trigger bars in a way, because that's where the market, and as you refer to it as news, the market is telling you there's hardly any supply around. So it tells you there's hardly any supply around, which is great before taking a breakout trade. And it also makes a real logical place for where to initially place your stop loss. It's so obvious. And this is how you then create those asymmetric risk versus reward trades. This is how you can take a stop loss here. Okay, again, still pretty tight on the cryptocurrency, around 10%, but it's gone up 17R in 3 weeks. That is how Isaac's account has gone up 492% in 30 days, because he's creating the asymmetric leverage. And to Isaac's point, is he's going to take that setup 100 times out of 100 times, but he's probably going to be wrong on at least 50 of those times. And it's having that understanding that, yeah, I'm gonna place it, but there's just as much chance I'm going to be wrong as I'm going to be right. But if I'm going to be right, I'm going to be right big on a relative basis for how much I was risking. So let me load up another one. Let's load up Luna. So this one in here, Isaac, a little bit different in terms of this entry, more of a lower pivot. So talk me through this setup, and especially for a lot of people watching, probably the context of the 50 SMA candlesticks and the volume during that time as well. What were you looking at in here?
it still hasn't changed on my screen. I think there's a little bit of a delay.
Oh, is it?
Looking at sand.
Oh, that's all. Has it changed now? Let me know when it changes.
Hasn't changed yet.
Oh, that's strange.
Yeah, it is strange. Anyway, I think I know that chart like the back of my head.
Oh, okay. Let me
like the back of my hand.
let me
It's
know when
starting
it
to
changes.
change now, I think.
Okay, cool.
Yeah. So from memory, there it is. Okay. So same thing. So this is a little bit different and a little bit of a different entry.
Yeah.
Where I was taking kind of a lower pivot point, in the bottom of the base. It might have been potentially setting up for a cup and handle, and I was speculating that it was going to do that, and I still kind of might think it might do that a little bit further up where we are currently.
Yeah.
That's kind of, if I am going to get back into this crypto, that's the kind of entry that I'm looking for. But same thing again. We saw volume, like the trading volume, quiet off. The crypto itself had made a really big run, so there was gave me a lot more confidence in taking a trade in this one, because if I am right on the trade, the risk reward, like what's that, 680% this thing went up. Not the most perfect entry point, like maybe you could arguably call it a spring. A little bit tough to get an entry point in that one, but
it's showing the ability that it can run really hard. Yeah,
exactly. It's showing you that big operators are willing to put some money into this. They believe in this project. So moving forward or moving to the right, as we kind of scan along, you're going to see you see it pull back, and then you see volume kind of, or buying, step back in and hold the price up when it comes down and touches the 50. And it continues to be strong. And then as it kind of moved along, it was showing those VCP type characteristics where you see it expanding and contracting. And then what happened, while I'm on the subject of contraction, you see the price where it is come down or start to roll down and contract see how it really starts to quieten down and get tighter and tighter and tighter. Those are the characteristics that we're looking for. That's what I'm trying to identify. And that also, not only does it kind of indicates like where to get a good entry point, providing that demand can show up and step in. It also, when the price is really, really tight, that's the best place to control risk, because you're not dealing with a green or a red candle that's moved 7%, 8%, 9%, 12%. It's really, really tight. So in terms of placing your stop loss, not only is it a logical place to enter, actually, regardless of the entry candle itself, it's the most logical place to enter, because it's the only place where you can control risk.
Exactly.
Outside of because I couldn't tell you how many times, guys, that I've FOMO'd into a position and broke the rules on an entry point just because something is going up. And I've got friends that send me screenshots of their positions or stuff, and I'll ask them when the entry point, and they just bought on the way up. And a lot of the cases the trades work, but like I guarantee you, if you do that over 10 times, over 50 times, because you're going to be wrong a lot, and these things when they do turn, they can turn very, very fast. And based on kind of the law of averages, it's gonna slowly start to backfire on you. And I found that when I was trading through that period that we talked about first, when we talked about like kind of when I started with Jack, when the market was moving sideways in that kind of that whipsaw environment that we like to talk about. You start taking trades like that or buying in the wrong spot, that's when you really start to get hurt or get burned.
Yeah, indeed. I could just listen to you. Like, if anyone watches the first time you're on the channel, Isaac, to now, like the difference in just kind of your overall persona and how you talk about it, like it's chalk and cheese. It really is. It's completely different. It's really, really great to see. And everything you're saying is coming from risk first. And your friends that send you the screenshots of, I'm in Doge, when Elon Musk was tweeting about it, and it's already up like 200% from the pivot point. Well, if they did that over the course of this is why they're going to go wrong, or why over the course of 100 trades, they're not going to make any money. They may have the one big winner or something, but they probably won't sell it when they should sell it, and they'll ride it all the way back down. But that's beside the point. Their average loss is going to be, if they even take a loss, is going to be 30%, 40%, 50%, 60% over 100 trades, because they're buying all wrong. Whereas you're buying right, and it's so obvious if you're right or wrong, because when you're identifying these pivot points, if that pivot point is taken out in terms of broken and it fails, the trade's wrong, we're wrong, and it's fine to be wrong. It's fine. So your average loss over the course of 100 trades is probably going to be somewhere in the 5 to 8-ish% region. But your average gain, especially when buying cryptocurrency, then this one here is a really good one for your exit. Your average gain is going to be many multiples of that, and that is why your account is up 492%. It's not because you bought Dogecoin when Musk was tweeting about it and made all your money in one trade. You're just doing it over and over and over again, which gives you, we were talking about before we were filming, gives you a real sense of accomplishment and confidence that I'm actually doing it. I'm trading properly. I'm in control. I know the risk. I know what I'm trying to accomplish, and that's what makes it consistent, which is great. So this one here, Isaac, is this chart loaded up? OMG, fantastic. So this one here, you got into it, and again, it happens. Stocks, cryptocurrencies are going to get out, look absolutely fantastic, and then do this and come crashing back down. But again, unemotional, rational about it. So this is one where you scaled out on this day, and then you would have moved your stop loss to break even, and then exited on break even. How did you kind of feel about that, or was it just okay?
I didn't really care. I'm like, I kind of wound back on it, and it's something I've been reflecting on a lot. Like I look back at the trade, and when it was a profitable trade, when it pulled back like that, I was at work. So regardless, like I was coaching someone, so regardless of how I manage it, if I'm not present and sitting in front of my computer, I couldn't have done a better job. Like it doesn't. Like I controlled my risk, I made money on the trade, like, and it goes back to where kind of my thinking's changed. So you've got to stop trying to be perfect, because you'll never get it right, and you'll beat the hell out of yourself trying to FOMOing or going, the fear, why didn't I sell on that day, why did I do that, why didn't I just take profit when it was up 25% or whatever it went up. Okay, went up 50.
Yeah, but you still, and again, I probably should have mentioned this earlier on in the video. You mentioned you're down under, you're an Aussie, so the US market is pretty much open when you're sleeping all night. The crypto market is most active when you're sleeping as well, because it's more, I'd say, driven by kind of the US traders. That's when it's more active, and
that's when
and you have a 9-to-5 job. You have your own business as well, where you do coaching. So like you've been able to achieve that and learn all of this, not being glued to your screen at all, and you're still able to do this. It's fantastic. Seriously, it's bloody brilliant. It really is. So well done. Yeah, well done you. So we got with them one more, Isaac. Let's load this one up in here. So this one here, talk me through this one. Setup was looking okay, pretty nice and getting pretty darn tight in there.
Yeah.
And then exit break even. Again, managed it really well. Talk me through this one.
Yeah, again, with this one, I believe I sold half or something.
Okay.
When it
probably did.
2R.
Yeah,
because it popped up and hit 2R pretty quickly. So the moment it crosses that line, I'm hitting that. I'm selling immediately. There's been a couple of ones when I've had time where I'm sitting in front of the screen and able to manage it, where I will not sell initially 2R if the kind of price keeps like kind of moves straight through that kind of price target and keeps going. But at the same time, even when I am in front of the screen, I'm way more inclined to pull the trigger, as opposed to, because there's been where I changed my mind. There was a couple of them. I've been in a couple of trades where the initial pop on the breakout candle came up and hit 2R, but because of the functionality of Binance, you can't have a stop loss and a take profit order on at the same time, which they need to change.
Yeah, that's frustrating. Yeah.
Yeah, but so because of that, there was a couple of trades that I'd made where I could have de-risked that night. And something I've noticed is de-risking and selling that portion and like straight away, it takes so much of the pressure off. Because you like when you're under pressure, or especially like if you've had a string of losses, and you feel like you're going backwards, because you'll start to second guess yourself a lot. And so just being able to like have that certainty, no, pull the trigger, take some profit, move the stop, and now sit back and watch.
Mm.
It makes it so much less stressful.
Yeah, and you can go to bed, you can go coach a client, and
Yeah,
that position, it's free rolled. I'm happy with it.
yeah,
I managed it well.
yeah,
And again, so much of again, you do powerlifting and have done it to a very, very high level and teach people high level stuff as well. And I can lift nowhere near as much as you can lift. I watched a video of Eddie Hall actually doing his 500 kilo deadlift. Yes, it popped up on my YouTube home screen for whatever reason. But like the reason he was able to lift that is not only he's obviously incredibly strong, but it was his mindset. You could see himself just psyching himself up, and it was so in his head, like to play sport at the highest level, to play trading or to trade at the highest level. So much of it actually just comes back to you being in a right place mentally and just feeling good on your trading. Like the one we looked at a minute ago, it goes up 50%, comes back down, you're stopped out, break even. Okay, no problem, it's going to happen. I scaled out of the position, I moved my stop loss up, I'd free rolled the trade. If I'm going to get stopped, I'm going to get stopped. And it's not having that, oh, I should have done that, oh, I should have done that, why didn't I do that, I could have, and kind of second guessing all of your decisions. You're making good decisions subject to your process in the moment. And it's like sport, it's fluid, it moves, the market moves, you have to adapt, you can't be stagnant and stale. So I would say one of the biggest changes I've seen with you, Isaac, over the last 12 months is your mindset. Like there's a saying I like, which is the most engaged but the least detached wins. So the people that are most engaged but are detached from the outcome usually win in any endeavor, sport, football, because they're not putting that pressure on themselves. They're just in the moment, they're playing the game, they're trading, they're doing it to the best of their ability. If they lose, great. If they win, great. But if they lose, no problem. It doesn't matter. We can learn something from it and we go again. It's not putting all of that constant pressure, kind of self-critique on ourselves and being our own worst enemy, basically. So much of trading is actually just being friends with the person in the mirror. And just being, it really is, it's just being happy and content. And I think that's been absolutely brilliant. You got any kind of final words of wisdom or anything like that to wrap it up?
I guess like to the members and kind of everyone else, if you're struggling, number one, speak up. If you're just kind of watching at home and you've been trading for a while, or maybe you're new to it, if you're serious about this, you have to invest in yourself and you have to invest the time, and you're going to save yourself a lot of heartache with working with a coach or working with someone like Jack. Basically, he's been a cheat code for me to how to do this. Without Jack, I wouldn't have achieved anything or anything close to the results I have. As a matter of fact, I would have lost money and continued to lose money, and then eventually would have gave up and came up with the excuse, oh, trading doesn't work or it's not for me, which I'm sure Jack's heard a million times.
1,000,001 times. But yeah, I'd say I haven't done anything, Isaac. It's all you. I remember the advanced course is something like 28.5 hours long, 599 pages, an absolute monster. And Isaac went through it in about 3 days. He literally binge watched the course. And that's kind of, we see loads of members come in, we see loads of members leave. As I was saying to Isaac, usually when the market's bad for 3 or 4 weeks, people just give up and quit. And that's when we see the most members lose. That's usually the turning point. Whereas actually, if you can get through those periods, if you can learn during those periods, have a realistic time frame, that Isaac's been doing this, like really working at it now for 12 months. And now he's starting to see kind of the fruits of his labor coming through. But yeah, I would say I could tell Isaac within, like, having now had lots of members come in, lots of members go, I can pretty much tell within the first day whether there'll be a success at it or not. just because of their kind of mindset. And I suppose that's kind of like people that go in to the army, the military, or whatever, the training team who are going to take them through basic training, and whether it's more advanced as well, whether it's kind of SEAL training, so buds or stuff like that, the training team probably know who's going to be there at the end and who isn't going to be there at the end within the first day, because it really comes down to attitude. And I'd say your attitude is brilliant, Isaac. So well done you. I'm really excited to see where you're going to be in 3 years, 5 years, 10 years. It's really exciting.
Well, I won't be living in Australia.
You'll be sailing around in a yacht if you carry this up.
No, well, I'm gonna just come and pester all of the PTC pros, and just gleam off you guys. Just, I don't know. That's the plan.
Yeah. Oh, brilliant.
Get a visa. Yeah, come visit and just continue my study.
Yeah. Oh, nice one. So thank you very much for watching, guys. Appreciate that. As always, if you enjoyed the video, please do like it. If you want to join Prime Traders Club and see me and Isaac in the forum, then there are links down below somewhere to that. And as always, thank you very much for watching.